Hi, I'm Victor, and I'm an active value investor. I like sharing my investing journey on YouTube as I cover companies that I invest in, do analysis, and then determine if I should buy, hold, or sell my shares. Today's company is DLH Holdings. This is a company that provides technology to healthcare organizations. Many of them are government agencies, and they have big news today on March 1st that they were awarded a very big contract. So I wanted to update my analysis on this investment. I scorecard all my investments and I want to ask 4 questions followed by a decision to buy, hold, or sell. First, do I want to be in the industry? Is the company operated and performing well? Is debt less than 3 times EBITDA? I want a discount on the stock. Based on those questions, I then decide whether I should buy, hold, or sell. DLH provides a variety of technology solutions for healthcare agencies as well as research centers. So they're headquartered in Atlanta, Georgia, where the CDC is headquartered. And Atlanta also has a very big healthcare, I would say, complex, many different organizations and universities that provide healthcare. So they are aligned with the federal government to provide a lot of the technology that these institutions need. And they also provide services like FEMA services to during disasters and during periods like COVID when you needed an organization to step up and help with a pandemic or a natural disaster. On February 28th, there was big news. They were awarded a very sizable contract, a $1.7 billion contract that's going to cover 5 periods. So that's a very large contract. This is a small company, so that should really help them with their top line revenues. Looking at their income statement for the most recent quarter, which ended December 31st, they actually consider that their first quarter. So they have a fiscal year that ends at the end of September. And the revenues did drop, and that's because they had a FEMA contract that really affected the quarter in 2021. So that's what really affected and skewed their numbers. But looking at their profitability, they maintain their profitability, which is very good to see. Their EBITDA for this quarter was 6.3 million. Very good EBITDA, good profitability. And if you annualize that, they're at a $25 million EBITDA rate. Taking a look at the balance sheet, cash looked okay, but the biggest change was the amount of debt. And there was a reason why they went from $20 million of debt to close to $166 million debt. That's that they acquired a company, which is going to help their top line, which is very good. So it's explainable that their debt really went up, and they are committed to paying it down. They've had a history of acquiring companies using debt to do so. Then they use their free cash flows to pay down that debt over time. Taking a look at their statement of cash flows, they have operating free cash flows. They don't have too much purchases of CapEx. So their free cash flow for the quarter was 7.5 billion, which is good. Annual rate of 30 million. That's a little lower than their full year their full year they closed in 2021. So I'm going to use the full year number in my calculations, pointing out that here's the big acquisition of that business that they acquired and I mentioned previously. I like to value companies by looking at the free cash flows that I expect in the future and discounting those free cash flows to today's dollars. DLH provided numbers for the last 2 years, and I'm taking the average of their free cash flow produced. I think they're going to do higher than this number, but I wanted to be conservative. It was 23 million. So that'll be the rate. They're going to grow by 10% very easily since they just acquired that big business. They're doing better than that 23 million. So that's a nice conservative number to start with and a good growth trend. In the future, I'm going to have them just grow at 2%. Again, being conservative. That creates a terminal value of 390 million beyond year 4. The discount rate I'm going to use a nice high number, 10%. This is a good company, historically very well capitalized, but it is a small company. So I'm going to go with a higher rate on the discount. Based on that information. The intrinsic value that I estimate for the whole company is $326 million, but their market cap's only $175 million. Therefore, it provides a nice 86% discount on this particular stock. Their balance sheet, as mentioned, they did that big acquisition and they're above that 3x that I really like seeing. So I'm going to give them a pass because they did do something productive with the debt, which is acquire another business that's going to help them generate more revenue, more profit, more free cash flow. But really keep an eye on it to make sure that they are going to reduce that number over time. DLH performed well. In 2022, they were profitable, very good free cash flow, and their balance sheet is understandable that it went up. It's good that they acquired that business and continue to grow the business. They had a huge contract win, which is going to help them. In fact, the stock went up 10% on the announcement of that big contract win. Healthcare will do very well in a recession. It's a good industry to be in when we hit recession, which I expect we're either in or will be in shortly. So they're in a very good category. They should have higher revenue growth since they just acquired that big business, and their top line should continue to grow. They'll continue to produce free cash and profits. It's great value in DLH. There's high upside in the stock since it's a small company and it's a target to being acquired. It's a good profit generator. So I'm really expecting this to be a company that could really go 3x or 5x. All right, so let's scorecard DLH. First, the industry, I really like healthcare during recessions, and I like healthcare overall. It's just a consistent industry and it's always in demand. This company is doing great, really growing well, very good management team. They are not under 3x EBITDA, but I'm gonna give them a pass since the debt was used for an acquisition. I want to discount the stock, very good discount available. Therefore, I'm going to keep buying additional shares in the company. Thank you for watching. I hope you found it interesting to evaluate this small company. Keep in mind, I'm just sharing my investing journey. I make no recommendations to buy any individual stock or bond. Good luck investing in 2023.